In financial accounting and controlling, we discuss about vendor master, company code tab. Under the company code data, the first one is account management. In vendor account management, the step number 1, reconciliation account. So what is meant by reconciliation account? A reconciliation account is a general ledger account that automatically records all transactions from vendor subledgers. Whenever you post a vendor invoice in MIRO, or post a vendor payment in F-53 or F110 by using automatic payment program, or post credit memos, SAP automatically updates the linked reconciliation GL accounts in real time. Where is it maintained? You assign the reconciliation account in the vendor master. So the menu path, go to vendor master, company code data tab. Under the company code data tab, account management tab. Under the account management, you can see the reconciliation field account. So example, if your vendor is, let's say, V1001, you may assign 160000 vendor reconciliation account. Now all postings to vendor V1001 will be updated in 160000. Purpose of reconciliation account: connects the subledger to the general ledger, ensures automatic financial accounting updates, prevents direct postings to control accounts, helps in accurate balance sheet reporting. These are all the purpose of reconciliation account. Why you cannot post directly to reconciliation accounts? Manual posting to avoid corrupting vendor balance. Only vendor transaction can hit that GL. The next field in the vendor account management, head office. What is head office in SAP Vendor Master? In SAP, the head office function is used when a company has multiple branch vendors, one central head office vendor. All accounting for the branches will be posted to and cleared through the head office vendor. Purpose of head office function: it helps companies manage centralized payments, consolidated statements, group level vendor balances. Example, vendor V1001 Chennai branch, vendor V1002 Mumbai branch, vendor 1000 is the head office. So both branch vendor can be assigned to head office. Now all invoices of 1001 1002 post to 100 account. Payment is made only to 1000 account. Vendor line item are shown under head office vendor. Where to maintain the head office? In vendor master, go to company code data tab. Under the company code data correspondence tab, you will find the field head office. Enter the vendor number of the head office. So the important notes: branch vendors cannot be reconciliation accounts. Branch vendors only reference the head office vendor. Head office vendor must have its own reconciliation account because all postings will hit that vendor. Branch vendor postings appear under head office. In FP-L1N, you will see items grouped. So the next field, short key. What is meant by short key? So short key controls what informations will automatically appear in the assignment field of vendor accounting. It helps in easy line item sorting, faster clearing of open items, simplified payment reconciliation. Where is short key maintained? In vendor master company code data tab. Under the account management, you can see the short key. So purpose of short key: when a vendor invoice or payment is posted, SAP will automatically fill the assignment field based on the short key. This helps to group and sort line items in FBL1N and F-44, etc. Common short keys and their meanings. 001 posting date. So you can see the example how the field look like. 002 document number, 003 vendor invoice number, 012 customer vendor is reference number 022 baseline date. These are all the examples. Most commonly used in vendor master, short key 001 assignment vendor invoice number. This is a preference option because make reconciliation easy, help in matching PO and invoice, useful in payment reference. So the next field is subsidy indicator. What is the subsidy indicator in SAP? The subsidy indicator is used in SAP to identify whether a vendor receives subsidies or grants from a government or other authority. It is mainly used for statutory reporting and tax related requirements in certain countries. So where is it found? You will see the subsidy indicator field in vendor master company code data tab in vendor account management. Purpose of the subsidy indicator, it is used to track vendor who receives or provide subsidies, support government reporting formats, help in tax deduction or special accounting rules, control how transaction should be reported in legal reports. Example, a government aided supplier may receive a certain subsidy for supplies. If you set a subsidy supply is 1, SAP will mark transaction for the vendor as subsidy related, include it in specific statutory report, especially it is country specific. So the important notes, subsidy indicator is country specific, mostly used in Eastern Europe and Latin America. In India, localization it is rarely used unless your organization has special government reporting needs. It does not affect accounting directly, it is for reporting and classification. The next field is authorization group. So where is authorization group is maintained? Under the company code data, under the account management, you can see the authorization group. So the purpose of authorization group is used restrict vendor master access, control which users can work with certain vendors, protect sensitive vendors, directors, government vendors, critical suppliers, intercompany code vendors. These are all the examples. How it works, simple explanations. You assign an authorization group, example A001 to a vendor. You assign the same authorization group value to a role authorization object. So authorization object is F-LFA1_BEK. So the field is BEGRU, authorization group field technical name. Only users with this authorizations can open or modify that vendor. Example scenario, your company has a vendor used for direct payments or intercompany code transactions. You won't want to every user to see or edit this vendor. So vendor 2001 authorization group is A001. Only finance managers have the access to A001. Other users get an error, you are not authorized to display the particular vendor. You can see this kind of errors. So the next field is planning group. What is planning group in SAP Vendor Master? Planning group is used in cash management and liquidity planning to classify vendors into groups for cash flow analysis, liquidity forecast, payment behavior tracking, bank position planning. It helps the treasury or cash management team understand when cash flows are expected for different types of vendors. So purpose of planning group is used to categorize vendor based on how their payments should appear in cash management reporting. So we can use FF7A for cash position, FF7B for liquidity forecast, FF7C for cash flow total records. Different planning groups lets SAP classify expected liabilities more accurately. Now when invoices are posted, SAP reads vendor's planning group, place the cash flow into the correct liquidity bucket. So the configuration information is go to SPRO, treasury, cash management, planning, define planning groups. So the next field is, before going to next field, you can see the planning group examples. 001 regular suppliers, normal payment cycle. 002 critical suppliers, payment need priority. 003 intercompany code vendors, internal group transfers. 004 government vendors, statutory payments. Like this you can define the planning group based on your client requirement. The next field is release group. What is release group in SAP? Release group is used to in SAP release strategy. It's a kind of approval workflow for purchase requisitions and purchase orders and a request for quotations and contracts. It is a classification object that groups together release codes and release strategies. So SAP knows which approvers belong to which approval chain, which document type is controlled by which release setup. The purpose of release groups helps SAP separate and organize different approval process such as raw material PR approvals, capital purchase approvals, service PO approvals, import PO approvals. Each can have different approval hierarchy. So where is release group used? In purchase requisitions under the release strategy, header items like CE KKO, item level, CBON, CE BAN. In purchase order level, CE KKO, header level. So release group is a key field in configuring these. Example, let us say you want to approval process release group R1 used for raw material purchase requisitions. The approval flow look like this. First the store manager will approve and the manager is going to approve, and finally the general manager is going to approve. So release group R2 used for capital purchase orders. Approval flow like this: manager, finance and MD, managing director, the final approval. Because these are in different release groups, the approval chain and conditions stay separate. Okay, so I'm just giving example R1 R2, two different release group with two different chain of approval process. So related elements in release strategy: a release group work along with release codes, release indicators, release strategy, release prerequisites and classification of characteristics. So the next field is minority indicator. What is meant by minority indicator in SAP? The minority indicator is used to identify vendors who belong to recognized minority categories for government or statutory reporting. It is mainly used in countries where companies must report minority owned suppliers, special procurement categories, social responsibility complaints, government mandatory diversity reporting. This field does not affect accounting or purchasing, but it is used for classification and only reporting purpose. So purpose of minority indicator: it helps organizations track procurement from minority vendors, comply with the government diversity requirements, generate special reports for audits, claim benefits or credits for minority based purchase, supply chain transparency. These are all the purpose of using minority indicator. Example, suppose your company buys from a vendor who is certified as a SC or ST vendor, human owned business, small disadvantageous business, minority owned SME. SME is nothing but small medium enterprise. You assign a code in the minority indicator field such as 01 SCST supplier, 02 human entrepreneur, 03 minority owned, like this. Then the SAP can include these vendor in spend analysis, diversity procurement reports and government compliance reports. The important notes when you are using the minority indicator: it is country specific, widely used in US, Canada and some other regions, has no impact on posting or payments, used mostly for reporting, not configuration. In some organizations, codes are audited annually. So the next field under the account management: certification date. So what is meant by certification date in our SAP vendor master? Certification date is the date on which the vendor was officially certified for a specific status, usually related to minority status, subsidy eligibility, quality inspection, quality certification, government approved vendor programs, diversity supplier certifications. It is used mainly for statutory complaints and reporting, not for accounting or purchasing. So purpose of certification date: the certification date helps companies track when a vendor's minority or statutory certification begin, when the certification is activated or expired, compliance with the government or audit requirements, eligibility for diversity or subsidiary reporting. So these are all the purpose of certification date. For example, a vendor is certified as a minority owned business on April 1, 2024. You enter this as a certification date. SAP can then includes this vendor in diversity spend for periods after the certification, exclude them before the date, show validity in audit reports. So the important notes when you are using the certification date. The certification date is informational only, no posting impact, often used in public sector and large corporate procurement, works with reporting tools like SAP BW, SAP Ariba, diversity reports or customer reports. So the next field is interest indicator. So what is mean by interest indicator in our SAP Vendor Master? The interest indicator is used to determine how interest should be calculated on overdue vendor items. If your company wants to charge or pay interest on delayed payments, the interest indicator tells SAP whether the vendor is interest relevant, which interest calculations rules apply, what rate or formula is used. So it is part of the interest calculation configuration in accounts payable. Purpose of the interest calculator, it controls if overdue vendor invoices should be included in interest calculation, which interest calculation type to use, which rates or terms apply during this interest run. So example, let's say interest indicator V1 12% yearly, so the grace period is 10 days, so the calculation method is simple interest. So the interest indicator V2 15% yearly, 0 grace period, compound interest. So if vendor invoices cross due date, SAP use this interest indicator to calculate interest in FINT report. So the important notes, if no interest indicator is maintained in vendor master, is not interested relevant. Mostly used in Europe and public sector, very rarely used in India unless required by contract. It does not affect payments automatically. Interest is calculated only when you run interest calculations. So the next field is interest cycle. So what is meant by interest cycle in our SAP system, especially in vendor master? Interest cycle determines how often interest is calculated for a vendor during the interest calculation run, FINT. It tells SAP whether interest should be calculated monthly, quarterly, yearly or for every run, how the interest periods are divided, how postings should be grouped. It works together with the interest indicator. The purpose of interest cycle, the interest cycle defines the number 1 frequency of interest calculation, number 2 how SAP groups overdue items into interest periods, number 3 whether interest should be accumulated or calculated fresh in each period. So these are all the purpose of interest cycle. So the common interest cycle values, let's say 01 monthly interest cycle, 03 quarterly interest, 12 yearly interest, so 00 so no cycle, simple run. Okay, so you can use the values, depends on your client requirement configurations. For example, vendor ABC's interest relevant interest indicator is V1, which you set. So interest cycle is 01, meaning every due invoice will be included in a monthly interest period. If invoice is overdue from April, SAP calculates interest for entire April period. Next calculation happens in the May cycle, not daily, it is only monthly basics. If the interest cycle is 00, SAP calculates interest every time you run FINT reports without grouping by months or quarters. So whenever you are going to run it, then system will calculate the interest. Okay, so the technical link is interest cycle works with interest indicator, interest calculation types, interest rules, interest period settings. So this helps accounts payable avoid daily manual interest tracking. The next field is last key date. So what is meant by last key date? The last key date is used in interest calculation to store the last date on which interest was calculated for the specific vendor. This date is automatically updated by SAP when you run an interest calculation, run FINT. It helps SAP avoid double calculation interest, calculating interest for the same period again. So generally this last key date is used for ensuring there is no double check, there is no same period used once again. The purpose is up to which date interest has already been calculated, from which date the next interest calculation should start. This prevents duplication interest postings. So the important note is you should not manually change this field unless correcting data. If it is blank, no interest calculation has been done for this vendor. Usually mainly in countries where interest runs are regular, like Europe, public sector, long-term AP contracts, accounts payable contracts. The next one is last interest run. So in SAP stores the details of the most recent interest calculation run. So this is for customers, vendors, interest, running interest, etc. So you can review when interest was last calculated. So where to check the last interest run? So in transaction FINT, FINT AP, FINT AR. So especially for accounts payable and accounts receivable, if you are working with interest calculation, go to T code FINT, enter your company code, business partner and customer or vendor. So enter the key date, then click on the environment, interest run list. You will see the last run date, run identification ID, items included, interest, amounts, all the informations you can see. So this is one option. Another option is in transaction F110 for payment program interest. If you want to know interest calculation during the automatic payment run, go to F110, enter run rate and identification, go to menu, environment, payment log. Here you can see whether interest posting happened in the payment run. So third one is table level. You can also view the last interest run in SAP tables. So these are all the tables you need to use to know the data. So the next field is withholding tax code. So what is meant by withholding tax code? A withholding tax code in India we used to call as TDS is used to define TDS rate, for example 1%, 5%, 10%. So TDS type is contractor, professional, rent, commission, etc. So the threshold limit is surcharges, cess rules, posting rules. Each withholding tax code represents a specific rate plus rule. Example in Indian TDS, 01 means professional fees 10%, 02 contracted with 1%, 03 rent with 10%, 04 commission with 5%. Like this you can use this examples in Indian TDS system. So how to configure this? So go to financial accounting global settings, withholding tax, extended withholding tax, calculation define withholding tax codes. Or you can use the T code directly OBWW. Required master data to set up this withholding tax code. So withholding tax type is required. For example, you can use the T code to create the tax type OBCG, like professional fees, contract fees or rent fees. So then withholding tax code you can create by using the OBWW T code. So here you can define percentage basic rate or surcharges or cess or minimum maximum base amount or thresholds. So the number 3, assign withholding tax in vendor master. So go to /NBP under the company code data tab. You can go to withholding tab, assign your withholding tax type and withholding tax code. So if exemption certificate is required, you can enter that one also. For example, posting examples, your invoice is value is 1 lakh rupees. So withholding tax code 01 TDS at a 10%. SAP automatically calculates. So 10,000 is TDS amount, post the remaining amount 90,000 to vendor. The next field is withholding tax country / region key. The withholding tax country / region key identifies which country's tax rules should be applied for withholding tax we used to call as TDS, withholding tax, retention tax, etc. So based on the country, the name will change and the procedure will change. SAP needs this because each country has different tax laws, rates, thresholds, certificates, and reporting formats. So why it is needed? Because TDS rules are different for India, US, UK, UAE, etc. SAP must apply the correct tax type, tax code, and calculation procedures. Reports and forms like India TDS files, 1099 forms, etc. depends on the country requirement. So these are all the examples of withholding tax country keys. For India, TDS tax deducted at source, and US 1099 withholding rules. For United Kingdom, PAYE CIS withholding. For Germany, German withholding tax regulations. For UAE, usually no WHT withholding tax in UAE. Singapore withholding tax for services and interest. In India, always use for TDS setup. So where to maintain this CDS setup? So where to maintain this configurations? So go to /NSPRO, SAP reference IMG, financial accounting global settings, withholding tax, extended withholding tax, basic settings, define country for withholding tax. No manual entry is usually needed in the vendor master. And the next field is recipient type. So what does mean by recipient type? Recipient type identifies what kind of vendors you are paying specifically for withholding tax TDS purposes. Different recipient types may have different TDS rates, exemptions, or rules depending on the country's tax laws. This field helps SAP apply the correct withholding tax calculations. So why is recipient types important? Because the TDS rules often depend on who the payment is made to. For example, individual, company or firm, HUF, trust, preparator, partnership, government body, foreign vendor. There are different types. So SAP uses the recipient type to determine whether withholding tax is applicable, which TDS code should apply, whether the reduced or zero rate applies, threshold limits and exemption rules. All this informations need to be coming under recipient type. So examples in Indian TDS rate changed based on the recipient category. Examples of the recipient types in India. So the recipient code is 1 individual or proprietorship, 2 company private limited or limited, 3 partnership firm, 4 HUF, 5 trust or society, 6 government, 7 foreign company. So like this you can create different code for recipient type. So the next field is exception number. So we need to understand what is meant by exception number. Exception number is the certificate or reference number issued by the tax authority that allows a vendor to receive reduced TDS or no TDS on payments. This is used mainly in extended withholding tax, especially TDS in India. SAP stores the exemption reference here so it can apply reduced tax rates, apply zero tax if fully exempt, apply zero tax if fully exemption, track validity of the exemption. So when is an exemption number is used? Vendor submit TDS exemption certificates like lower deduction certificate under section 197, no deduction certificate, exemption under special government notifications, PAN based temporary exemption. So PAN is nothing but permanent account number. SAP needs the certificate number as a proof. So example in India TDS, the income tax departments may issue section 197 certificate, vendor gets reduced TDS rate. Example, professional fee instead of 10%, vendor gets 2% as a TDS. So SAP needs the exemption number, which is nothing but certificate number. The second option is from 10% to 0%, which means exemption. Vendor is exemption for a specific period. SAP requires exemption number, validity from and to date, and reduced rate information also. So why SAP needs it? For audit trail, for TDS reports, for validating reduced zero rate to avoid manual errors. Valid until is the expiry date of a vendor's TDS or withholding tax exemption or reduced rate certificate. It tells SAP how long the exemption or reduced rate is applied. So purpose of valid until, SAP uses this date to number 1, stop applying exemption after expiry. Number 2, automatically return to normal TDS rate once expired. Number 3, ensure TDS calculation follow legal validity. Number 4, prevent wrong or excess exemptions. The important information: if you leave valid until blank, SAP assumes no exemption applies. So it's very important. So the next field is exemption authority. So what is authority? Exemption authority is a government department or legal authority that is issued the vendor's withholding tax exemption or lower certification. So SAP stores this so that you know who issued the exemption. Auditors can verify the certificate. Reporting remains legally compliant. So why SAP needs exemption authority? Because withholding tax exemption must be supported by proper certification issuer, government authority, complaints for audits and legal checks. When generating TDS report, SAP may print this field for statutory use. So the next field is previous account number. Previous account number is used to store the vendor's old account number if the vendor master was migrated from a legacy system like from Tally or Oracle or from the old SAP version. A different company code, an old account structure used before rememoering, and manual vendor ledger which is coming under pre-ERP systems. It is not used for postings, it is only reference informations. Okay, you can use the existing old account number as a reference informations when you are migrating the system from SAP old version to latest version, let's say R3 system to S4 HANA or ECC to S4 HANA, or from other ERP system like a Tally or Oracle to SAP system. Or you can transfer the manual ledger to in SAP software. So why is it used? This field helps finance teams may old vendor numbers to new SAP vendor numbers. During audits, if old bills or vouchers still show the old account number, for smooth transaction from old ERP to SAP to avoid confusions after renumbering. Important notes: this fields does not affect accounting postings. It is only for reference, audit and migration purpose. You can leave it as blank if not used. So what is personal number? Personal number is the employee ID from SAP HR, which is coming under HCM, Human Capital Management, that links a vendor to an internal employee. This field is used only if the vendor is also an employee, such as employee who receive travel reimbursement, employees receiving petty cash payments, employee who act as a freelancer consultants but still have an HR number, employee who need vendor type payments outside payroll. SAP stores the HR personal number under the PE or NR technical field in our SAP system. So why personal number is used? If links FI finance with HR human resources for employee travel expense reimbursement, when an employee submit expenses, SAP post FI documents to a vendor linked with their personal number. Second one is cross application reporting, HR plus FI combined reports. Third one is avoid duplicate master data. The system knows the vendor is actually an internal employee. And payroll related postings if configured. So where it comes from? From SAP HR module like HCM2, the T code PA20, PA30, PA40. So for example, employee name is Suresh, the personal number is 1005. In vendor master, the personal number is 1005. You have to enter the same number. The next field is main economic activity. Main economic activity represents the primary business or economic activity of the vendor. It is typically a classification code that tells SAP what type of business the vendor is involved in manufacturing or services or construction or transport or trading, etc. Okay, this field helps in reporting compliance, statistical analysis, or government or tax related classifications if required. So why it is used? Companies use this field for the number one is legal or statistical reporting. Some countries require reporting vendor activities for tax authorities, government statistics, industry classifications. Number two, vendor segmentation, useful for spend analysis, KPI reports, category wise purchasing decisions, risk assessment. Number three, complaints and audit. Some industries have specific complaints rules. So the next field is a distribution type for employment tax. The distribution type for employment tax is used when the vendor is actually an employee and you are processing employment related tax payments through the SAP FI instead of payroll. This field tells SAP how to distribute or classify taxes that related to employee payments, such as the number one, travel reimbursement with taxable components. Number two, allowances paid via financial accounting. Number three, contract or part-time payments made to employees. Number four, any employee payments that require statutory tax reporting. This field is only used when FI and HR payroll are integrated. So when this field is used, you will use this field when the number one, vendor equal to employee linked via personal number. So here vendor means it is an employee. Employee is the vendor. So, and number two, taxable payments to an employee go through FI, not payroll. Number three, country specific labor/tax rules require proper classification of the tax. If your vendor is a normal business vendor, this field is not required. Keep it as a blank. If the vendor is an employee, your internal employee, then you need to use this field. So the next one is activity code for gross income tax. So which is nothing but it is a country specific classification that tells SAP what type of activity or service the vendor performs for the purpose of gross income tax or professional tax reporting. This field helps SAP determine whether the vendor's payment is subjected to gross income tax or which activity code or rate should be used. Number three, how to classify the vendor in statutory declarations. This field is mainly used in Latin America countries, Mexico, Argentina, Brazil. In many other countries, including India, this field is not used at all. So why is it used? For countries that use a gross income tax, the government needs the activity code to classify number one, what service the vendor performs. Number two, what industry they belong to. Number three, which gross income rate applies. Number four, whether exemptions exist. Number five, SAP use this code to determine the correct withholding or reporting during FI postings. For example, the country specific, let's say Argentina. So common activity code include 010 professional service, 20 construction service, 30 wholesale trade, 40 retail trade, 50 transport service, 60 manufacturing. Like this, they are going to use different examples. These code affect the gross income withholding. For example, in Mexico or Brazil, industry classifications, gross income tax reporting, regional tax distribution. In India, it is not used. So just keep it as a blank when you are creating vendor for Indian companies. All this field coming under vendor account management in company code data. Next we can go for vendor payment transactions. Under the vendor payment transactions, you can see the detailed each and every field requirements. So under the financial accounting and controlling, in vendor master company code data, step number 2, payment transactions. Under the payment transaction, the first field is payment terms. What is meant by payment terms in our SAP vendor master? Payment terms define when and how a vendor must be paid. They control due date calculation, cash discount eligibility, payment blocks and unblocks, payment run behavior under F110, Payment terms affect all vendor invoices automatically. How payment terms work in SAP? The payment terms calculated the baseline date, then SAP adds the number of days to calculate the due date. For example, payment terms is 30 days, baseline date is 10th January 2025, the due date will be 19th February 2025 based on 30 days payment terms. Cash discount examples. In payment terms, 2% cash discount if paid in 10 days, otherwise you need to pay the entire invoice amount in 30 days. Let's say invoice amount is 1 lakh rupees. The payment within 10 days, you can able to pay only 98,000 rupees. After 10 days, you must pay the 100% amount 1 lakh rupees. SAP automatically performs this during payment run in F110 T code when you are running the APP automatic payment program run. Which payment terms should you select? Depends on your agreement with the vendor. Let's say vendor gives 30 days credit, payment terms 0002 for 30 days. Vendor wants immediate payment, then you can use the payment terms 0001 immediate payment. Give yearly payment discount, the payment terms 2% discount in 10 days and net in 30 days. Constructions or subcontract vendors for long credit, payment terms it should be 60 or 90 days. So like this, based on the different requirement, different conditions, you can create different payment terms. So and based on the specific vendor requirement, you can select the payment terms. The important notes: the payment terms from PO override vendor master. If blank in invoice, SAP takes from vendor master. Change affect new documents, not old ones. Whatever the changes you are going to make it will be affect the future new documents. There is no any impact on old document which we posted already in the SAP system. So the next one is credit memo payment terms. What is meant by credit memo payment terms? Credit memo payment terms in SAP define how refunds or credit memo issued to a vendor or customer are due for payment. This field is used specifically for credit notes, not for normal invoices. Where it is used in vendor master under the company code data tab, you can go to vendor payment transactions. The purpose: credit memo payment terms override the regular payment terms only for credit memos. Example: normal payment term is 30 days, credit memo payment terms immediately, due instantly. So if you post a credit memo, SAP will use the credit memo payment terms, not the invoice terms. This helps ensure refunds and adjustments are settled correctly. Why different payment terms? Credit memos may need to be cleared immediately. You may want a different cash discount logic for credit memos. Helps in automatic payment program F110 for correct due date calculation. If you want, I can explain how this interacts with F110 clearing or payment term configuration in OPB8. So the next field is tolerance group. Tolerance group in SAP for vendors and customers defines the limit within the company within which the system can post automatic differences during payment process. Purpose of tolerance group is it controls payment differences automatically posted, the number one option. How much difference SAP can post without manual intervention during incoming payments for customers, outgoing payments for vendors. Number 2, cash discount permissions. Whether a customer or vendor is allowed cash discount after payment term expiry, partial cash discount. Number 3, underpayment and overpayment limits. Defines maximum overpayment SAP can accept, maximum underpayment SAP can write off, maximum percentage difference allowed. So example, if the tolerance group allows underpayment 200 rupees, overpayment 150 rupees, cash discount tolerance 3%, then during the payment, if the customer pays 100 less, SAP writes off automatically. If customer pays 120 extra, SAP accepts as overpayment. If customer takes 3% extra cash discount, SAP will allow automatically based on this configuration. So you can use the OBA3 T code to create this particular tolerance group for customers and vendors. The next field is check caching time. Check caching time in SAP is used to define how many days after issuing a check the system should expect it to be cached. So where you see it under the vendor master company code data, go to vendor payment transactions. Then you can see the field check caching name. Check caching time. The purpose, when you make a vendor payment through checks, SAP needs to estimate when the check amount will actually leave your bank account. This field helps SAP delay bank accounting clearing. The payment stay in an intermediate clearing account for the number of days you enter. Improve cash flow planning. The system calculates cash flow, cash outflow date, liquidity forecast, payment proposal timing. So these are all the system will calculate. For example, if check caching time is 3 days, vendor payment run F110 issued check on 10th November, SAP assumes the vendor will cash it by 13th November. Bank account clearing postings will expected on only 13th November. The typical use cases, countries where the check payments are common, US like and India, organizations that issue post-dated checks, companies needing accurate liquidity management. The next one is payment reason. Payment reason in SAP is used to specify the purpose or justifications of the payment that will appear on payment documents, bank files and statements. Where you find it under the company code data, payment transactions, you can see the payment reason. So also it is appear in customer master for incoming payments. Purpose of payment reason, it helps SAP and banks understand why the payment is being made and provides clarity in bank transfer like NEFT, RTGS in India and SCPA in EU. The payment reason appears in number 1 bank statement, number 2 payment advice, number 3 vendor bank notifications. Then automatic payment run in F110 documentation. When SAP generates the payment file, the payment reason is included in the payment medium. So legal and statutory requirements. Some countries mandate that every bank transfer must include a payment purpose. Example of payment reasons: INV invoice payment, ADV advance payment, REB rebate payment, REF refund, SAL salary, tax payment. These are all the examples. The example scenario: vendor invoice value is 50,000 while creating vendor master or during F110 run. Payment reason INV, bank file shows payment reason invoice payment for vendor 30001 INV. Vendor understands immediately. Configuration for this payment reasons: under the financial accounting, accounts receivable and accounts payable, business transactions, outgoing payment, define payment reasons. So you can create custom payment reasons, codes and assign descriptions. The next field is check double invoice. So when this indicator is activated, SAP automatically checks whether the invoice with the same key fields has already been posted. SAP compares vendor number, invoice date, invoice reference number, usually it is invoice number only, and invoice amount. So, and the purpose is, this prevents duplicate vendor payments, incorrect accounting entries, fraud or accidental double posting, manual review effort. So these are all the preventions, the usage of check double invoice field. How it works: simple example, vendor submit invoice, the invoice number is 1001 50,000 rupees. You post in Miro or FB60. Later someone try to post the same invoice 1001 again. Because the double check invoice is active, SAP stops the where it is controlled There are two places for duplicate check control. One is vendor master. This field turns the check on off for the specific vendor. In system configuration, go to material management, financial accounting, invoice verifications, set tolerance for duplicate invoices, or you can use the T code directly, OM or DC. So configuration defines which fields SAP should compare, and system will generate error or warning message behavior. Important notes: if the vendor uses the same invoice number every month, you may deactivate this field. Very rare cases used to happen. Best practice, always keep it on for all vendors. The next field is payment methods, where you maintain it. In vendor master, company code data, payment transactions, you need to maintain the payment methods. The purpose of payment methods: you can enter one or multiple payment methods. Purpose of payment methods: this field controls which payment types are allowed for this vendor. For example, bank transfer only, check only, no cash payments, international payments allowed. Which invoices are considered in F110 payment run. If an invoice does not match the payment method allowed for the vendor, SAP will not pick it up. Determines the format required for payment files. For example, NEFT, RTGS, SEPA, XML, BACS. These are all the format required for payment files. The next field is house bank. Purpose of house bank: it tells SAP from which bank account the payment should be made. When paying this vendor, select the correct bank during payment run F110. SAP will choose this house bank for vendor payments. Assign the right account details like a bank name, account number, GL bank account, check lots, payment medium file structure, and control which bank account is used for different vendors. For example, local suppliers, HDFC Bank, international suppliers, Citibank, high value vendors, ICICI Bank. So first of all, what is meant by house bank? A house bank is your company's bank stored in SAP with bank key, bank account, account ID, currency, account GL mapping. You can have multiple account IDs under the same house bank. So let's say under the HDFC Bank, you can able to create current account, salary account, vendor payment account. To configure this bank account, you can use the T code F512. So the next field is payment block. So what is meant by payment block? The purpose of payment block: the payment block is used to stop SAP from paying a vendor or a specific invoice. Prevent automatic payment. Invoice will not appear in F110 payment proposal, which is nothing but APP, automatic payment programming proposal. And then manual control, used when invoices under dispute, goods not received, GR IR issue. GR means goods receipt, IR means invoice receipt, and wrong price or wrong quantity, vendor reconciliation needed. Due to these reasons, you can control the invoices from the APP by using this payment block. And financial audit control stops unapproved invoices being paid. These codes depend on company configurations. So the configuration menu path: under the financial accounting, accounts payable, go to business transactions, outgoing payments, and you can define the block key descriptions. If block is for vendor or invoice, usage in F110. Vendor level versus invoice level payment block. There are two methods to block an invoice. One is vendor level, another one is invoice level. First one is vendor level. Blocks all invoices for that vendor, usually when vendor is suspended or inactive. Invoice level blocks only the specific invoice, most commonly used type, due to various issues. So these are all the common payment block codes. A means blocked for payment general block, B block due to missing GR goods receipt, C quantity inspection block, D block by user manual or block for release workflow, V vendor level payment block. Okay, these are all the commonly used codes. Anyway, based on the client requirement, you can define and you can use it. Then payment method supplement. The purpose of payment method supplement: It further classifies or controls how a payment method behaves. This field is used when one payment method has multiple variants. Example, NEFT or RTGS under the same bank transfer, regular check versus special check format, domestic transfer versus foreign transfer, special bank selection rules, priority payments, different payment medium formats. So these are all the examples for payment method supplement. So there are two scenarios. The first scenario, bank transfer by payment method T, 01 NEFT, 02 RTGS, 03 IMPS. Like this you can define. And example 2, scenario 2, by check mode you can enter the payment method C. A is normal check, B is courier check, C is high value check. Like this you can differentiate the payment method supplement. So the next one is grouping key. Grouping keys in SAP is used to automatically derive other fields during document posting such as payment terms, payment method, payment block, house bank, short key, assignment field. It helps SAP fill these fields automatically based on the predefined logic, reducing manual entry. Purpose: grouping key is used for automatically deriving values during invoice postings. For example, based on posting date, the system can automatically generate assignment numbers or fill due dates. Second one is automatic assignment field generation. A common use is, let's say, Z01 assignment equal to document number, Z02 assignment equal to posting date plus vendor number, Z03 assignment equal to fiscal year plus posting dates. The next one is standardization of accounting data. Ensure consistency for reporting, customer/vendor analysis, automatic clearing. The configuration menu path. Under the financial accounting, accounts receivable and payable, go to business transaction, grouping keys. There you define grouping key ID, what field values SAP should derive, assignment terms, payment data, all the informations you need to update. So the key points: grouping key saved date entry, grouping key saves data entry time, helps maintain consistent document references, works only if required configuration in IMG. You can use different grouping keys for different vendors. So these are all example of grouping keys. 001 assignment equal to posting date, 002 assignment equal to document number, 003 assignment equal to vendor number plus posting date, 004 for terms based on GR rate, 005 due date adjustment based on the calendar. So like this you can use different type of grouping keys based on your client requirement. The next one is alternative payee. Alternative payee in SAP is used to when payments for a vendor should be made to a different vendor or third party instead of the original vendor. The purpose of alternative payee, it tells SAP, do not pay this vendor directly, make the payment to another specific vendor. This is commonly used when, number one, parent company receives payment on behalf of subsidiaries. Example, vendor ABC distributors, payment should go to ABC corporate head office. So here ABC distributor is a subsidiary, ABC corporate is the head office for the, let's say, parent company. Number two, agents or brokers receive payment. Example, payment for goods goes to a sales agent. And vendor has multiple bank accounts managed separately. Vendor has outsourced collections. So types of alternative payee. There are three ways SAP supports. The first way, vendor level alternative payee, defined in vendor master, always pays to the alternative payee vendor. Number two, one-time alternative payee, specified while posting an invoice in FB60 or Miro. Only that invoice is paid to the different vendor. Number three option, exclusive alternative payee, company code level, configured so that only the alternative payee is allowed, original vendor is never paid directly. So you can set up three levels. One is for invoice level, another one is for vendor level, another one is for company code level. So these are three ways you set up the alternative payee. For the configurations under the financial accounting, accounts payable, business transaction, maintain alternative payee, you define which vendor can be alternative payees if exclusive payment is allowed. The important notes: if blank vendor is paid normally, if alternative payee is blocked or inactive, system may give payment run error, appears on payment advice and bank file transparency. The next field is bill of exchange limit in local currency. So bill of exchange limit in local currency in SAP is the maximum credit limit allowed for a vendor when setting invoices using bill of exchange. It is maintained in the vendor master. The purpose: this field controls maximum exposure allowed for a vendor. SAP checks this limit when posting invoices, running the automatic payment program F110, posting bill of exchange settlement. If the limit is exceeded, SAP will block further bill of exchange posting for that vendor. Example: vendor has a bill of exchange limit is 5 lakh rupees. Bills already issued for 3,50,000, remaining available 1,50,000. In a new bill of exchange post is 2 lakh, SAP will reject or block it because the limit exceeds the 5 lakh. So what SAP tracks by using this bill of exchange? When bills of exchange are used, open exposures is tracked automatically, balance reduces as the bills are cleared and paid. For the configuration under the accounts receivable, accounts payable, go to business transactions in bill of exchange. Settings cover posting rules, dunning rules, payment configuration and limit behavior. So the typical use cases used in countries and industries where vendors allow deferred payment via negotiable documents. Bill of exchange are common in France, Italy, Spain and some Asian markets. Used to control financial exposure, prevent exceeding agreed credit limits, maintain credit discipline. These are all the controls used. The next one is indicator clearing between customer and vendor. In SAP allows automatic netting or clearing of open item between a business partner who is both a customer and vendor. The purpose: if the same business partner is customer in AR accounts receivable, vendor in accounts payable AP, this indicates allows SAP to offset receivables and payables against each other automatically. So, for example, the role customer sales invoice, the balance is 50,000 receivable. The role is vendor purchase invoice, 30,000 payable. With this indicator on, SAP can clear. How it works: the condition, same company code, customer and vendor master must reference each other. Vendor master must store the related customer number. The customer master must store the related vendor number. Clearing indicator must be active in both master datas. So how to configure it? Go to financial accounting, accounts payable receivable, business transactions, clearing cross company code clearing between customer and vendors. The benefits: reduce manual reconciliation, lowers outstanding balances, useful for group companies, employees or partners who buy and sell. The next field is single payment. Meaning, single payment is an indicator in SAP that ensures only one payment is generated for all open items of a customer or vendor during a payment run instead of multiple payment documents. So the purpose: if this checkbox is selected, SAP groups all due invoices into one consolidated payment instead of issuing multiple checks, transfers or payment documents. Helps reduces bank charges and simplify reconciliation. The typical business use cases: vendor who request a single consolidation payment statement, and customers where payment receipts must be merged into one entry, companies wanting to minimize transaction charges. If the indicator is not selected, payment program may generate multiple payments depending on items due, dates and other settings. The next one is indicator send payment advices by EDA. This means the indicator tells SAP that payment advice notes should be sent electronically via EDI. EDI is nothing but electronic data interchange instead of sending them by print, email or post. So what is payment advice? A payment advice is a document sent to a customer or vendor showing which invoices were paid, how much was paid, deductions, discount, etc. It is usually issuing during an automatic payment program under F110. What this indicator does? If this field is ticked, SAP will generate payment advice as an ADI message. So no paper or printout version is created unless configured separately. The vendor or customer must be set up for ADI communications. Example IDOC like a PX or 2002. If this field is not selected, the payment advice is produced normally, printout, email, etc. The business use case. This is typically used for the large companies processing high invoice volumes, vendors or customers who want automatic digital updates, integration with ERP to ERP communications. The next field is Payment Clearing Group ID, meaning the Payment Clearing Group ID is a field used in SAP to group open invoices, so for clearing purposes during payment runs or manual clearing. Here I can say open invoices like invoice, credit memos, etc. It helps SAP decide which item should be cleared together based on grouping logic. Purpose: it allows the system to identify items that belong to the same payment group, clear items only within the same group, prevent mixing unrelated items during clearing. Example, if a vendor supplies raw materials, services, you can assign payment clearing group RM for raw materials invoices, payment clearing group for SRV for service invoices. During payment run F110, raw materials invoices cleared only with RM items, services invoices cleared only with the SRV items. Benefits: better control in clearing, prevent incorrect mixing of invoices, helps in matching and reconciliation, useful in grouped or complex payment process. The next field is indicator send payment advice by XML. Meaning this indicator determines whether the SAP should send payment advice documents in XML format to the customer or vendor. Payment advice is a document that tells the business partner which invoice were paid and how the payment amount was allocated. Purpose: if the indicator is set, SAP will generate and send the payment advice in XML format, usually through email or integration middleware, for example PI, PO or CPI, or EDI XML messages or bank communication channels. Example scenario: a vendor requests the payment advice must be sent in XML for their automatic reconciliation system. When this indicator is checked during the payment run F110, SAP will generate XML payment advice, send it electronically, not send a paper or PDF version unless configured additionally. Why is XML used? Because it is machine readable, easy to integrate with the third-party systems, used extensively for automation and electronic data interchange. If the indicator is not set, SAP will use the defined methods such as email, PDF, printout, EDI message if separately configured. So the next one is prepayment relevance in supplier master, meaning prepayment relevance is a field in the vendor or supplier master that indicates whether a vendor involved in advance payment before goods or service are received. If this indicator is set, SAP treats the vendor as requiring down payments, which can affect how postings and payments processing work. The purpose: a company must pay a vendor a portion of the amount before delivery. Tracking and clearing of the advance payments must be controlled. Financial reporting needs to identify such vendors separately. So what happens when it is active? It set a prepayment relevant. Down payments to this vendor are posted to special GL accounts. SAP may require prepayment informations during invoicing or PO processing. Reporting and payment programs can filter such vendors accordingly. The business examples use this option when the vendor requires advance payment before shipment, initial deposit before contract execution, stage-based payments, for example 20% upfront, 80% later. Common in industries like construction, heavy machinery, import requiring project-based services, generally used the prepayment or the advance payment options. If the field is not activated, SAP will treat the vendor like a normal supplier and no special GL routing is applied. Payment process only after the invoicing. This is standard flow. Fine. So we discussed elaborately all the fields coming under vendor payment transactions in company code data tab. Thank you. We'll see you in vendor correspondence. Under the financial accounting and controlling, in vendor master company code data, step number 3, vendor correspondence. Under the vendor correspondence, the first field is dunning procedure. What is meant by dunning procedure in our SAP system? The dunning procedure in SAP defines how the system will send reminders or notices to a customer or vendor when invoices become overdue. It controls how many reminder levels exist, for example level 1, level 2, level 3, level 4, like that. How many reminder exist, time gap between one reminder to another reminder. Let's say for example 5 days or 3 days between one reminder to another reminder, text used in each reminder letter, what kind of format, what kind of informations need to be there in that reminder notice, charges or interest added. So you can add additional charges when you are sending the reminder notice for the overdue payment, or you can calculate interest also during this dunning period. Where is it used? You maintain the dunning procedure under the customer master or vendor master in company code tab, vendor correspondence. Especially in vendor master under the vendor correspondence in company code data tab, you can assign your dunning procedure. How it works? When the customer or vendor invoices are overdue, SAP runs the dunning run F150. Based on the assigned dunning procedure, SAP decides whether the reminder is needed, which dunning level to apply, what message and charges to include. Examples of dunning levels, let's say level 1, 10 days friendly reminder, level 2, 30 days turn reminder with warning, level 3, 45 days legal warning or recovery notice. So these are all the some examples. If no dunning procedure is assigned, customer or vendor will not receive reminder automatically even if payments are overdue. Next field is dunning block. What is meant by dunning block in SAP? A dunning block is a field in SAP used to prevent a customer or vendor from receiving dunning letters even if they have overdue invoices. When this block is set, the business partner is excluded from the dunning run. When you are running the dunning run in F150, where is it used? Okay, you can maintain this dunning block under the vendor master company code tab, vendor correspondence. Why is it used? The block is helpful when customer or vendor is a dispute, payment extension or installment plan is agreed, legal or special handling is required, temporary suspension or reminder is needed, VIP customers should not receive automated notices. These are all the reasons to block specific invoice or specific vendor related invoice. Types of dunning blocks. A dunning block can apply at two levels. One is at master data level, blocks all items for a specific partner in the sense either it is a customer or vendor. Second level is line item level, so blocks specific invoice only when we are running the automatic payment programming or automatic dunning run. Behavior in SAP, if a dunning block is set, partner is skipping during F150 dunning run, no reminder letters are created, no change in due dates or balances, only impact automated correspondent. The example scenario, Situation invoice under dispute. Why block is used? Customer say amount is incorrect. Second one is negotiated. Delayed payment. No reminder needed. Holiday or vacation shutdown. Temporary stop notices. High value customer. Managed manually instead of sending automated notices for high value customers. The next field is account number of the dunning recipient. The field specifies which customer or vendor account should receive the dunning letters. If the reminders should be sent to a different account, then the one owing the money. In simple terms, you enter another account number here. Dunning notices for the current account will be sent to that alternative account. Why is it used? The feature is useful when a head office receives dunning letters for all branch accounts. Group companies want all reminders addressed to a central accounts payable team. One vendor manages invoicing and payment for multiple related vendors. Dealers or franchisees networks have a parent company handling collections. So these are all the examples. The account number 50001, the branch is Chennai, dunning recipient is 5000, and the account number 5002, branch is Coimbatore. So the dunning recipient is 50000, which means the head office account is 5000. If you sent 5000 as a dunning recipient for the branches, then the branch accounts overdue invoices will generate reminders that are sent to head office only 5000. If some invoices pending in Chennai branch or Coimbatore branch, straight away we can send it to only head office, and head office will take care of the remaining activities. Effect on dunning run F150. If this field is filled, the specified recipient account is used for correspondence. Related invoices are grouped and printed, sent together. The original account still holds the financial postings, only letters are redirected. Different from address redirect. This is account level redirection, not just changing the printed address. Alternate account decides who receives notices, how items appear in the dunning log. So if left blank, the same customer or vendor account receives its own dunning letters as normal. The next field is date of last dunning notice. This field shows the date of which the last dunning letter was issued to the customer or vendor. SAP automatically updates this date every time a dunning run in F150 issues a new reminder letter. The purpose, it helps SAP, the number one, determine the time gap between dunning levels. Number two, decide whether the next reminder is allowed based on the dunning procedure rules. Number three, track when the customer or vendor was last reminded. Example, if a customer's last dunning notice was sent on November 15th, 2025 and the dunning procedure requires 10 days gap between levels, the next dunning can happen only after 25th November 2025. If you run F150 before the date, SAP will not increase the dunning level. So the example for related fields, dunning level, current reminder stage 1 to 3, date of dunning key, run date of the last dunning, next dunning date, date when next reminder is allowed. If field is blank, which means no dunning letter has ever been issued, customer/vendor has never been included in a run, or dunning is disabled for this particular account. The next line item, date of the legal dunning proceedings. The date of the legal dunning proceedings is used to record the exact date when a customer's overdue account has legally entered formal debit, recovery or legal collection action. Why this date is important? The number one, stops normal dunning notices. Once legal actions have started, the system should no longer send a regular reminder or dunning letters. Number 2 indicates legal status of the customer. It shows that the account is within court-driven or legal recovery process. Number 3 provide audit and compliance proof. The date acts as a legal record for financial audits or court references. Number 3 provides audit and compliance proof. The date acts as a legal record for financial audits or court references. Number 4 prevent additional charges or interest if required. Some organizations stop calculating late fees or interest after the legal process begins. Number 5 helps accounts receivable team track case timeline. They can see from when the matter moved from internal reminder to legal recovery. In simple terms, it means from this date we are no longer just reminding the customer. This debt is now handled legally. The next field is dunning level. What is meant by dunning level? Dunning level refers to the stage or step number in the dunning process that indicates how many times a customer has been reminded about overdue payments. Each level represents how serious the reminder has become. Examples of the dunning levels: level 0, no reminder. Customer has unpaid invoice but no reminders sent yet. Level 1, first reminder, gentle reminder to pay. Level 2, second reminder, more urgent follow-up. Level 3, final notice, serious warning before legal action. Level 4, legal or external collections sent to lawyer or legal agency. So this is how you have to set up the dunning level. The next field is dunning clerk. A dunning clerk is the employee responsible for managing and following up overdue customer payments in an organization. This person monitors pending invoices, sends reminder notices, and coordinates with the customer to ensure payments are collected on time. The main responsibility of a dunning clerk, the number 1 is send dunning notices, which is nothing but payment reminders. Number 2, monitor overdue invoices and track the dunning level. Number 3, contact customers through email, phone or letter. Number 4, update customer payment status in the system, let's say in SAP. Number 5, coordinate with the sales or legal team if customers do not pay. Number 6, maintain collection records and reports. The role in SAP: dunning clerk code is assigned to each customer in the master data. This helps identify which clerk is responsible for each customer, print their name and contact details on the dunning letters, track performance and workload. So let's say clerk code DK01 Mr. Ravi for the region Chennai, DK02 Ms. Priya for the branch or region Bangalore. They are the responsible dunning clerk. If a customer assigned to DK01 become overdue, SAP will send reminders with Ravi's details and show that Ravi is responsible for collecting the payment. Simple explanation: a dunning clerk is a person who follows up with customers who have not paid their invoice on time. The next field is key for dunning notice grouping. The key for dunning notice grouping is a field SAP used to group multiple customers or vendor together so that they receive a single combined dunning notice instead of separate letters. This key tells SAP how to group the accounts during the dunning run in F150. The purpose of this dunning notice grouping: it helps when a company has multiple branches but the head office should receive one consolidated dunning letter, and several customer accounts belong to the same corporate group, and the business wants one statement instead of many small reminders. So these are all the examples. For the customer C1001 Chennai branch, 1002 Coimbatore branch, C1003 Bangalore branch, but we assign the grouping key G001 for all the 3 branches. When SAP run dunning, instead of sending 3 separate letters, it creates one consolidated letter showing overdue invoices of all 3 branches. The advantages when we are using this dunning notice grouping: reduces printing and communication cost, clear collection communications, centralized handling by one finance department, better control for corporate customers. These are all the advantages. The simple explanations. This key allows SAP to merge multiple accounts into a one running letter during payment follow-up. The accounting clerk abbreviation is a short code stored in the customer or vendor master in SAP that identifies the person responsible for maintaining and monitoring the account in accounts receivable or account in accounts payable. It is usually a short ID like AR01, MK, PG, RAJ. This code represents a real accounting clerk in the company. Purpose: this field helps the number one, identify who is responsible for the customer or vendor account. Number two, print clerk details on account statements or running letters. Number three, support internal tracking and audit. Number four, filter the short accounts by clerk in reports, easily route queries and communications. So for example, AC01, the clerk code name is Priya, AC02, the clerk code name is Rahul. And customer C1000 is assigned AC01 Priya. Then running letters and account statements will show contact Priya AC01. Reports can filter account by AC01 or AC02. Number of overdue account per clerk. The business benefit. Number one, clear responsibility. Number two, faster query resolution. Number three, organized workload distribution. Number four, better reporting and monitoring. The simple explanation, it is a short code that tells SAP which accounts is responsible for a customer or vendor account. The next field is our account number with the vendor. The field stores the account number that the vendor has assigned to your company in their own system. Think of it as how the vendor identifies your company in their records. Why is it needed? Vendors often maintain a unique account number for every customer they supply in SAP. You store this number so that it appears on purchase orders and correspondence. Number two, helps the vendor identify your account easily. Number three, ensures payments and inquiries match correctly. Example, your company buys from a supplier called ABC Industries. In your SAP system, ABC may have the vendor number 200001. In the vendor system, your company may be known as CUST_789. So in this field, you store CUST_789. Whenever you send documents like purchase orders, payment advice, remittance informations, the vendor can immediately recognize your account. The typical business use cases: vendor assign your company a customer number, payment reconciliation becomes easier, vendor can match orders and invoices quickly, helps avoid confusions if multiple legal entities exist. The simple explanation for this topic: this is a customer number that your vendor uses to identify your company in their system. The next field is clerk at vendor. Clerk at vendor is a field in the vendor master that stores the name or code of the vendor's representative who handles your account. In simple terms, it is the contact person at the vendor side responsible for orders, invoices, and communication with your company. The purpose: this information helps your accounting or purchasing team. Whom to contact at the vendor for queries such as invoice issues, payment disputes, delivery problems, pricing clarifications. And number two, improve communication speed and accuracy. Number three, print the contact name on documents such as purchase orders, payment advices, statement or letters. Example, vendor ABC Industries suppliers, vendor clerk is Ms. Priya. When issues arise, example, payment mismatch, your accounts payable or procurement team knows contact Priya for ABC Industries to solve the issues. Benefits: speed up communications, avoid confusions about whom to contact, helps in follow-up for invoices and payments, improve vendor relationships management. The simple explanation for this topic, it is the contact person at the vendor side responsible for managing your company's account. The next field is accounting clerk's telephone number at business partner. This field stores the phone number of the person responsible for accounts or payments at the vendor or customer side. The purpose helps your internal team quickly contact the responsible clerk at the business partner for finance related matters such as invoice clarifications, payment status inquiries, dispute resolution, missing document follow-ups, and speed up communication and avoid delays in the payment processing. So where it is used appears in vendor customer master data under the vendor correspondence details. Can also show on reports, dunning notices, payment advice and invoice printouts depending upon the configuration. The next field is accounting clerk fax number at the customer or vendor. This field stores the fax number of the person responsible for accounts at the business partners organizations like AP or AR, accounts payable or accounts receivable. The purpose used when your company needs to send dunning notice, payment reminders, statement of accounts, invoice dispute documents and payment confirmations. Provides a direct communication channel to the responsible finance person at the customer or vendor companies. So this is the purpose, and where it is used, obviously under the vendor correspondence you can see the accounting clerk fax number. So the next field is internet address of partner company clerk. This field stores the email ID of the accounts clerk at the customer or vendor company, so which is nothing but the finance contact person. Purpose enables direct electronic communications with the person responsible for invoice queries, payment issues, dunning notices, statement of accounts, reminders and settlement discussions. Helps SAP automatically use this email address while sending a dunning letters, payment advice, reminders, correspondence, documents. The next field is indicator local processing. SAP, the local processing indicator is used in the customer or vendor master and affects how correspondence and dunning are determined for branch or plant specific accounts. The purpose, this checkbox tells SAP that the dunning and correspondence should be processed locally. Statements, reminders and notices should be generated at the company code or branch level, not centrally. Why is this needed? Some companies have multiple branches, regional offices, decentralized accounting. In such cases, each branch may want to send its own dunning letter, payment reminder, balance confirmations, statements of accounts. If local processing is on, then the specific branch process its own dunning letters are sent from that location. Local accounting employee handles follow-up. If local processing is off, then all dunning and correspondence is processed centrally, typically from the head office. So the typical business scenario example, a company has branches in Chennai, Coimbatore and Bangalore. Each branch deals with its own customers and collections. If the customer master has local processing enabled, then Chennai branch will generate dunning notices only for its Chennai customers. Other branches cannot issue the letters. Effect on reports. When enabled, SAP selects documents belong to the local company code based on account assignments like a summary. Settings checked, dunning and correspondence process locally, branch level. If unchecked, centralized processing, corporate level. So this is a summary of indicator for local processing. The next one is indicator for periodic account statements. This indicator is SAP controls whether the customer or vendor should receive periodic account statements such as monthly statements, quarterly statements, yearly statements. When enabled, this customer or vendor will be included automatically in the next periodic account statement run. How it works? If the indicator for periodic account statement is on, then The business partner will receive a statement at regular intervals. Their open items and balances will appear on the printed emailed statement. They are automatically selected when running daily monthly processing. If the indicators of the partner will not be included in regular statement unless selected manually. The typical business scenario example, a company with 5,000 customers want to send monthly account balance statement to all customers. Statements should include outstanding invoices and payments. By enabling this indicator in the customer master, SAP automatically identifies the customer during if the FY 27 period account statement run. So what it controls? Setting is on, checked, meaning partner receives periodic account statement. If unchecked, which is off, partner is excluded from automatic statement runs. So the next field is account memo. Account memo is a free text note field used to store important internal information about the customer or vendor. This text is visible only within SAP, is not printed on invoices or statements or external documents. Helps accounting and finance users remember special instructions or remarks. The typical use cases, example of what might be entered in the account memo: customer pays only after 45 days, vendor gives 5% cash discount for bulk purchase, customer under legal monitoring, follow before dispatch, do not ship to old warehouse address, expect payment delays, verify the credit before dispatch. So these are all the typical used business cases for account memo. So we discussed elaborately each and every field under the vendor correspondence in company code data in our vendor master. Thank you. In financial accounting and controlling, vendor master company code data. The fourth topic is vendor status. In vendor status, the field number 1, central posting block, all company codes. Central posting block is a control indicator in the customer or vendor master that prevents all postings for the vendor or customer in every company code of the client, such as invoices, credit memos, payments, etc. When this box is ticked, no FI posting can be made, applies globally across all company codes. The master record remains active but blocked for transactions only. The purpose, it is used when the business relationship is temporarily stopped, the customer or vendor is under investigation, dispute or credit hold. The company wants to prevent new accounting documents until verification, vendor or customer is closing or no longer used. So in these 4 different situations, we used this central posting block for all company code level. Effects: once activated this option, no new documents can be posted. Existing process like a payment run, F110 or dunning level will also stop. Master record cannot be used for normal accounting activities. So the difference from other blocks: the block type, posting block, company code level, blocks transactions only in one company code, central posting block, block postings in all company codes, purchasing and sales block, blocks transaction only in MM procurement or SD modules for sales. The next field is posting block for company code. Posting block for company code is a control indicator in the vendor or customer master that prevents FI postings for the specific business partner in one company code only, such as invoices, credit memos, payments, etc. It does not affect other company codes. Master record remains active but blocked for transactions in the selected company code only. The purpose: used when business transactions need to be temporarily stopped for a customer or vendor in one specific company code. Account is under audit or verifications, outstanding issues or dispute exist. Vendor or customer is to be phased out in the company code but still used elsewhere. Effects: If this posting block is active, no accounting entries can be made under the T code FB60, FB70, F-02, Miro, F110, etc. Payment run and dunning will ignore the partner. Other company codes can still post if not blocked. The difference from central posting block. Only one company code and it is only local block. When you are using the central posting block, then it is blocked for all company code in the client and it is a global block. So this is the difference between posting block at company code level and posting block at central blocking, which is all company code. So the next one is deletion block for master record, company code level. So deletion block at the company code level is a flag in the customer or vendor master that prevents the master record from being marked for deletion or removed in that company code until certain checks are completed. It ensures the account is not accidentally deleted, posting, payment and reporting integrated is protected. This block applies only to one company code, not the entire client. The purpose of this line item or the field used when open items, balances or transactions still exist and management wants to review the account before deletion and the account is still linked to ongoing business processes and the vendor or customer should not be removed yet. When it does, when this block is activated, the system does not allow the deletion flag to be set for that company code. The user must first remove the block before deletion. The master records remains active. So the difference from deletion flag, item deletion flag stop the user from marking an account for deletion. So deletion flag marks the account as deleted, after which no new postings are allowed. So this is the difference between deletion block and deletion flag. The next field, deletion flag for master record, company code level. So a deletion flag at company code level is used in SAP to mark a customer or vendor master record as deleted in a specific company code. After this flag is set, the master record cannot be used for new postings such as invoices, payments, credit memos, etc. And the master data still exists in the system but is treated as inactive. You can still view old transactions and reports. This deletion flag affects only that one company code, not the entire client. Purpose of this field used when the business relationship with the customer or vendor is completely stopped in that company code. No future transactions are expected. All open items are cleared. Master data needs to be cleaned up. What it does, when this flag is activated, new FI postings are no longer allowed. Payment run F110 and dunning exclude the account. Master data does not appear in normal input searches. The record remains in the system for audit and history purpose only. The account is finally removed only after achieving the existing business transactions data. So the difference between deletion flag and deletion block. So the difference from central deletion flag. So the deletion flag is marks the account as a deleted, no new transaction allowed. But a deletion block prevents setting a deletion flag used for protection before deleting. So the difference from central deletion flag, company code deletion flag applies only to one company code. Central deletion flag applies to all company codes in a specific client. So whatever the company code available in that specific client, all the company code is going to be applied in the central deletion flag. So the first one is you can apply for only one company code, the other company code which will not affected at any cost. So this is about vendor status, topic number 4 under the company code data. Thank you. So the next one, financial accounting and controlling FICO, vendor master especially in company code data. Step number 5, vendor withholding tax. Under the vendor withholding tax, the first topic indicator for withholding tax type. Indicator for withholding tax type is SAP is used to specify which kind of withholding tax applies to the vendor or customer, such as income tax, service tax like a TDS, dividend tax, contractor tax, professional fees tax, etc. It tells SAP what category of TDS or withholding will apply when invoices or payments are posted. The purpose: this field activates withholding tax for the business partner, determines how tax is calculated, controls the tax rate, base amount, exemptions, and posting rules, allow multiple tax types for the same vendor if it is applicable. Example: a vendor may have like a type 43 like a TDS on contractor, maybe type 52 TDS on professional fees. SAP will apply the correct one based on this indicator. So where it is used: in FI posting FB60 and Miro and F-02 vendor invoice and payment run F110. Then adjustment entries, tax reports, for example statutory TDS reports. So the next field is text 40 characters long. Meaning of this field: this field is a free text field that allows users to enter up to 40 characters of descriptive information related to the vendor or customer. It is usually used to store short notes, labels, or reference text that is useful for accounting purpose. The text can be used for additional internal remarks, identification notes, short descriptions, business partner reference codes, information that does not fit into fixed fields. It is visible to SAP users but not normally printed on external documents unless specifically configured. So where it is found: this field may appear in vendor master, customer master, withholding tax details, certain document screens. So when we talk about the characteristics: maximum 40 characteristics, free format like letters, numbers, symbols. You can use alphanumeric, there is no any restrictions. Optional field used only for internal record informations. Examples: some typical entries: TDS exempt for financial year 2025, preferred transport vendor, works with the Chennai branch only, PAN pending submissions, annual contract vendor. The next field is withholding tax code. The withholding tax code in SAP defines the specific rules and percentage rate of withholding tax TDS that should be applied to a vendor or customer. It determines tax rate percentage and calculation base like a gross or net amount, and rounding rules and posting accounts, and when and how tax should be deducted. It works together with the withholding tax type. The purpose of this withholding tax code: SAP uses the withholding tax code to automatically calculate TDS or withholding during invoice or payment posting. And number 2, post the tax amount to the correct GL account. Number 3, ensure compliance with the government tax regulations. Number 4, generate reports for statutory returns. So here it is the example: withholding tax type 43, withholding tax code 01, meaning TDS on contractor at 1%. Tax type 52, tax code 02, TDS on professional fees at 10%. Tax type 52, tax type 54, tax code 03, TDS on commission at 5%. If a vendor is linked to withholding tax type 43 and withholding tax code 01, so SAP knows deducted 1% TDS, use the specified posting accounts, apply during invoice and payment. So when it is used, withholding tax code is applied in invoice posting like the T code FB60, Miro FB70 and F-02, and payment run F110, adjustment postings, reporting statutory compliance, and data stored Examples of rules inside a withholding tax code: tax percentage, minimum taxable amount, surcharges and cess, chapter or section reference, GL accounts for tax posting, whether tax is at invoice or payment. These are all the informations stored under the data, and difference between withholding tax type and withholding tax code. Withholding tax type, category of tax, for example TDS or contracts or fees or rent. Withholding tax code specify rate and calculation rules under the withholding tax type. So the next field, indicator subject to withholding tax. So the subject to withholding tax indicator in SAP specifies whether a vendor or customer is liable for withholding tax, which is nothing but TDS in India. If this checkbox is selected yes, SAP will calculate and deduct withholding tax during invoice or payment posting. Not selected no, SAP will not apply withholding tax even if the configuration exists. So the purpose, this indicator is used to activate withholding tax calculation for the business partner, ensure proper TDS deducted based on legal requirements, prevent tax calculation for exempt vendors or customers. The typical business scenarios, if selected yes, vendor is liable for withholding tax such as contractors, professional service providers, rent or commission service suppliers. If not selected no, vendor is not subject to TDS, for example vendor exemption under government rules, foreign vendor not taxable in the country, one-time vendor for small non-taxable purchases, exempt companies with valid exemption certificate which is provided by government bodies. So where it is used: during invoice posting FB60, Miro FB70, F-02, payment run F110, adjustment and reversals. If enabled, SAP checks withholding tax type and withholding tax code, recipient type, exemption limits. All these four field SAP will select if the subject is selected yes. What SAP does internally? When it is enabled, SAP reads withholding tax type and withholding tax code, calculates TDS, posts withholding tax to proper GL accounts, store details in table like with underscore item. The next field is type of recipient. The type of recipient is a field in SAP's withholding tax setup that identifies the legal or business category of the vendor or customer who is receiving the payment. Different recipient types may be taxed differently based on government regulations. The purpose of type of recipient: this field helps SAP apply the correct withholding tax rules, exemptions and rates, distinguish tax treatment between different kind of payees, ensure compliance with statutory requirements. So the examples, some possible recipient types vary by country. So the recipient type is individual, the meaning is a person, freelancer or consultant, etc. And the recipient type is a company, registered business or legal entity. If the recipient type is partnership, then LLP, firm or partnership. If the recipient type is government, then the government body or department. If it is NGO, trust or non-profit organizations. Foreign vendor subject to different tax rules. These are all the examples. Different countries may define different recipient types based on the income tax law. So where it is used, again SAP checks type of recipient during invoice posting FB60, Miro, F-02, FB70, all these T codes, and payment runs F110, withhold tax reporting. It helps determine applicable TDS percentage, minimum taxable limits, whether exemptions apply or not, tax posting logic. So the next field is withholding tax identification number. The withholding tax identification number is the official tax registration number of the vendor or customer used for withholding tax, which is nothing but TDS purposes. In India, when we talk about withholding tax, which is nothing but TDS, we are talking about TDS, tax deducted from the source. It is issued by the government tax authority and uniquely identifies the vendor for tax reporting and compliance. So the purpose of this withholding tax identification number is SAP stores this number so that it can be printed on statutory documents like TDS certificates. It is includes in government tax filings and reports. Auditors and authorities can verify vendor tax status. SAP can validate exemption or tax applicability. These are all the purpose to use this withholding tax identification number. Examples: the purpose and format vary by country. So in India, PAN number, permanent account number is used. In US, EIN, employer identification number or SSN is used. In UK, UTR, unique taxpayer reference number is used. In Germany, so tax number or VAT ID. In Australia, ABN, Australian business number. Like this, these are all the examples. Country based, the number is going to change. When SAP uses it, SAP prints this number in TDS certificates, withholding tax reports, payment advice, statutory returns. During audits or reporting, this helps uniquely identify the vendor or customer. So the technical informations, it works along with withholding tax type, withholding tax code, exemption details if maintained, data stored in vendor master table like NLF BW, LF B1, etc. So the next field is exemption certificate number. The exemption certificate number is SAP is the reference number of the official government issued certificate that exempts a vendor or customer from withholding TDS either fully or partially. This certificate is usually issued by the tax authority when the vendor qualifies for reduced tax deduction, qualifies for zero tax deductions, has special approval for exemption for a certain period. Purpose: this number is stored in the SAP so that the exemption can be legally validated. The number prints on statutory tax documents such as DDS certificate. Authorities or auditors can cross-check the exemption status. SAP knows not to deduct tax during invoice or payment posting based on exemption rules were used in SAP. During vendor invoice posting FB60 Miro, customer billing FB70, payment trends F110, withholding tax reporting, if the exemption conditions are satisfied in SAP, applies reduced or zero withholding tax, reflects the exemption reasons in tax reports. So these are all the used cases. Example, real life examples of exemption certificates. In India, the section 197 lawyer or nil TDS certificate. In US, W9 exemption declaration. In UK, tax arrangement approval for HMRC. In Germany, certificate for withholding relief under double taxation treaty. The typical scenario: a contractor submit a government certificate that allows TDS at 0% up to 10 lakh until 31st March 2026. You enter exemption certification number, validity dates, exemption limit and percentage. SAP ensures no tax deducted within the approval limit, which means until 31st March 2026 for up to 10 lakh rupees. There is no TDS, which is 0%. So the next field is exemption rate for batch input. Exemption rate for batch input in SAP, especially in vendor master withholding tax type, which means it is the percentage of tax exemption that applies to a vendor when entering data through batch input, such as during mass uploads, data migration, recording programs, BDC, interfaces like LSMW, BABI, etc. Why it is used? If a vendor has a tax exemption certificate, they may not be required to pay full withholding tax. So instead of the normal withholding tax rate, for example 10%, SAP allows you to specify an exemption percentage such as 100% exemption, no tax deducted, 50% exemption, only half of the tax applies, So the example, normal TDS rate is 10%, vendor exemption rate is 6%. So effective tax calculated 10% multiply with 100 minus 60, which is equal to 4%. Okay, so the normal TDS is 10%. So vendor get exemption 60%, which means you can apply for only 4% for a specific vendor. In summary, exemption rate for batch input equal to a percentage used during mass data entry to reduce or fully waive withholding tax for a vendor based on exemption documentation. So the next field is date on which exemption begins. What it is? The start date of the tax exemption period granted to a vendor for withholding tax. From this date onward, SAP will apply the reduced or zero tax rate based on the exemption details. Why it is needed? Vendors who have a TDS exemption certificate, a lower deduction certificate, or a temporary tax relief are exempt only for a defined time. SAP must know when this exemption becomes effective. Example, if a vendor received an exemption validity from April 1, 2025 to March 31st, 2026, then date on which exemption begins is April 1, 2025. Date on which exemption ends is 31 March 2026. During this period, SAP will apply the exemption percentage instead of the full tax rate. In simple words, the date on which exemption begins equal to the first day from which the vendor's withholding tax exemption becomes valid in our SAP system. So these are all the field which is coming under vendor withholding tax in company code data in our vendor master. Thank you. So in vendor master company code data, topic number 6, vendor text. Under the vendor text, the first field is language key. The code that identifies the language used for communication, printing and display for a customer or vendor master. Why it is important? The key determines the language in which invoices, statements, dunning letters and correspondence are printed. This language for description, the language for descriptions and text fields were supported. The default language for system communication with that business partner. Examples, the common SAP language keys, English EN, German DE, French FR, Spanish ES, Tamil TA. Like this, for each and every languages there is a 2-digit key. By using that 2-digit key, you can select the proposed language. The next field is text ID. What is text ID in SAP Vendor Master? A text ID is a code that identifies a specific type of text stored in master data or documents. It helps SAP classify and organize different type of long text. Where it is used? The text ID appear in customer master, vendor master, material master, sales orders, purchase orders, billing documents, and examples of where text ID is used. Let's say sales notes, delivery notes, internal notes, purchase instructions, technical descriptions. These are all the used cases. In example, why text ID is needed? It helps SAP store multiple different text separately, retrieve the right text for printing forms, for example, invoice, PO, delivery, etc. Avoid mixing up different text purposes. Example of text IDs 001, sales order text 002, delivery text 003, invoice text 004, internal note Z001, customer specific remark. Like this, you can create multiple text ID with the descriptions based on our client requirement. The next one is short text and a long text. A short description field with a limited character length stored directly in the master data table used for quick identification of the record. Where it is used? Material master, for example, material short text, vendor master and customer master descriptions, general ledger account short descriptions, sales and purchase document item short descriptions. The purpose to quickly understand what is the master record is about without opening additional screens appears on reports, drop down menus and selection list. The long text, what it is? A detailed description field without strict character limits, stored separately in a SAP text table, not directly in the main master table, can contains multiple lines where it is used. Material master long descriptions, customer and vendor instructions, purchase order line item text, work center description, routing operation notes. The purpose to store detailed information that does not fit in short text field such as specifications, instructions, usage informations, quality notes, terms and conditions. So the simple difference between short text and a long text. So one is length. When we talk about length, in short text is limited characteristics. In long text, almost unlimited. So in the future side, stored in main master table when we talk about short text, separate text table when we talk about long text. Another one is usage. Short text for identification, long text for detailed notes or instructions. The another one is displayed in list and search screens for shortcut, drill down view or text editor for long text. So this is a simple difference between short text and long text. Very simple explanation. Short text equal to title, long text equal to full description. The next field is more text exists. What it indicates? This is a system generated indicator shown in master data such as vendor master, customer master or purchase order items. It tells you that additional long text has been maintained for this record. The location, you may see this indicator in vendor master, customer master, material master, purchase order item details, sales documents, work centers, routings, etc. So these are all the locations you can able to see the more text exist options. The purpose to inform the user that long text or notes are stored even if they are not immediately visible on the screen, helps users know there is more information to view before making business decisions. How it works? When the users enters long text in the text editor, for example via button text, SAP automatically set the flag more text exists. If the long text is deleted, the indicator will disappear automatically. The very simple explanations, more text exists means extra notes have been entered and are available to read. If you want, I can also show where the long text is stored in SAP tables. For example, the table is STXH/STXL. So these are all the examples. So this is about vendor master text informations. Thank you. So under the vendor master company code, 7th one is vendor country specific enhancement. The first field is section code. Section code in SAP used vendor and customer masters. What is section code? Section code is a field used mainly in withholding tax TDS configuration, especially in countries like India. It helps SAP identify the legal section of the Income Tax Act under which withholding tax TDS is applied. The purpose, the section code tells SAP under which tax law section the vendor payment is taxable, how TDS should be calculated, which tax rules and rates apply. These are all the purpose where it is used. You will normally find the section code in vendor master and customer master and withholding tax configurations. Then TDS postings and reports. So the example forms 26Q, 27Q, etc. So these are all the example of section code in India, especially used for TDS. TDS is nothing but tax deducted from source of income. The section code 194C, payment to contractors, 194J, professional services, 194I, rent, 192, salary, 194H, commission, 195 for payment to non-residents. Why section code is important? It ensures the number 1, correct TDS percentage, number 2, proper reporting in statutory returns, number 3, accurate compliance with tax laws, number 4, correct classification in TDS certificates. The very simple explanation, section code identifies under which government tax rule the TDS should be applied for a vendor or customer. If you want, I can also explain where section code is configured in SAP, how it flows during invoice posting, which table stores it. The next field is exemption certificate number. We discussed in previous sections. You can see the previous video about exemption certificate number. The next we can go for exemption rate. Exemption rate is the percentage of tax that is exempted for a vendor or customer from withholding tax. So withholding tax, which is nothing but I'm talking about TDS in India. Why it is used? Sometimes a vendor has a government approved tax exemption or is eligible for reduced TDS rate, has submitted a certificate allowing partial or full exemption. In such cases, SAP uses the exemption rate to calculate only the taxable portion. Example, vendor total invoice value is 1 lakh rupees. So the normal TDS rate is 10%, exemption rate is 60%. So the taxable portion is 40% of the invoice value, which means the TDS calculation is look like this: 1 lakh multiply with 40% into multiply with 10% equal to 4,000. So in normal TDS, 10% means it should be 10,000. So the government gives 60% as exemption rate, then you can get only 40% TDS, which means 4,000 rupees. So where it is maintained, you enter the exemption rate in vendor master withholding tax tab. This works along with exemption certificate number, exemption start date and end date. So very simple meaning, exemption rate tells SAP how much of the vendor's payment is not subject to withholding tax TDS. If you want, I can also explain flow in accounting entry or SPRO configurations. So the next field is date on which exemption begins. This field also already discussed in the previous videos, so you can go through that. Anyway, let me give short descriptions. This is the date from which the vendor is allowed to receive TDS benefits or exemption benefits. So this is the date on which exemption begins, which is nothing but the start date of the exemption benefits or TDS benefits. So date on which exemption ends. So this is nothing but date on which exemption ends is the last date on which the vendor is eligible for TDS exemption or reduced TDS rate. So the next field is reasons for exemption. Reasons for exemption is a field used to record why a vendor or customer is exempt from withholding tax TDS or allowed a reduced deduction rate, why it is needed. Government authorities may grant tax relief for special tax status, government or public sector organizations, charitable institutions, lawyer deduction certificate, startup tax benefits, export service exemption, temporary tax relief due to policy. SAP need this information for compliance, legal reporting and audit trails, justification for tax benefits. So how SAP uses it? When you post a transaction, SAP checks the exemption settings, applies reduced or zero withholding tax, stores the reason for reference in reports. This ensures transparency and supports audit documentation. So the typical examples: Ration code 01 meaning lower deduction certificate issued by income tax department, Reason code 02 fully exempt under government notification. Reason code 03 charitable non-profit institution. 04 export service exemption. 05 government department supplier. 99 other and special cases. Like this you can create multiple reason code based on your client requirement in real time business scenarios. So the simple understanding, reason for exemption explains why the vendor is not being charged fully or any withholding tax. Indicator for withholding tax type. What is it? The field is used to identify whether a particular withholding tax type is active or applied for the vendor or customer. It tells SAP whether the withholding tax should be calculated, which tax type applies, for example, TDS on services, TDS on rent, or TDS on interest, etc. Why it is needed? A vendor may be a fully taxable, partially exemption, not subject to tax under certain conditions. This indicator controls whether SAP should calculate withholding tax or skip withholding tax, or sometimes calculate partial withholding tax. How SAP uses it? If this indicator is checked active, the withholding tax type is applied during posting and a tax is calculated. If not checked, SAP ignores this withholding tax type for the vendor. So the example in India TDS, you may have multiple TDS types. Let's say T1 TDS on contract section 194C, T2 TDS on professional fees section 194J, T3 TDS on rent section 194I. For a vendor, if only T1, T2 are active, tax applies only under 194C or 194J. If none are active, vendor is not subject to TDS. So very simple understanding. This indicator tells SAP whether a specific withholding tax category should apply to the vendor or not. The text 40 characters long, which is nothing but you can enter up to 40 characters informations about your withholding tax type. So this is we discussed detailedly just before the video. So withholding tax code, this is also discussed already. Threshold amount for exemption India. So this is also discussed already. Let me recall. This is an important field. The threshold amount for exemption is the minimum payment value up to which no TDS is deducted as per Indian income tax rules. SAP uses this field to automatically skip TDS deductions until the vendor's payment exceeds the defined limit. Why this field is needed? In India, TDS is not always deducted from the first rupee. Many TDS sections have statutory minimum limit, which is called thresholds. Example, contractor payments section 194C, professional fees section 194J, rent section 194I, etc. If payments do not exceed the threshold, no TDS is deducted. How SAP uses it? During invoice posting, the number one, SAP accumulates the vendor's payment for the financial year. Number two, if total payments less than the threshold limit, no TDS is deducted. Number three, if total payment is exceed threshold limit, the TDS applies only on the excess amount. Example, the threshold for section 194C contractor, threshold is 30,000 rupees per bill, yearly threshold 1 lakh rupees. Case 1, invoice amount is 25,000, does not cross threshold, so no TDS will be debited. Case 2, total payments so far 90,000, new invoice 20,000, total value is 1,10,000, threshold crossed, so TDS applies on 1,10,000 minus 1 lakh equal to 10,000. So very simple meaning, you can able to pay only TDS for the 10,000 rupees excess amount. So threshold amount for exemption is the limit below which TDS is not deducted. Currency key we already discussed in detail before videos. So this is about vendor country specific enhancement. So until this topic, under the vendor master, company code chapter is over. The next we need to start with purchasing. Thank you.